as well as IndiaMART are down in the trading session. But let's try and decode the earnings of IndiaMART a bit more. We have Mr. Dinesh Agarwal, founder and CEO at IndiaMART, joining us on the show to talk to us about just that. Hi Dinesh, good to be speaking with you. Well, it's a very weak set that you have posted. What went wrong as per you in the quarter gone by? Did it go as you had planned, or there were some shocks that hit you?
So, in terms of collection from customer, our collection from customer grew at about 6%. In terms of revenue from operation, it grew at about 18% to 315 crores. And in terms of cash collection from cash generated from operating activities, it is about 101 crore to 125 crores this quarter. So, it has been a mixed result. We have been slower on the paying subscriber addition, as well as be slower on the deferred revenue collected from the customers.
Okay, so this lower collection growth that we are seeing of around 5.5% odd in the second quarter, as compared to 14-15% that we had seen previously. Obviously, previously in previous quarters also it used to be in double digit, and this has been in single digit this quarter. So that is one of the major concerns in the street. When do you expect this number to come back to again double digit? And firstly, what happened in the second quarter which led to this lower growth when it comes to collections?
So one is some of our execution issues could be that this is one of the quarter that we have suddenly had from 15%, 14% to 5% growth rate in collection. So I think we are expecting that to bounce back again to double digits in the coming quarters soon. Why the collection from customers has been coming down from upwards of 20% to lower single digit, lower double digit numbers is probably because of the fact that for the last 5 quarters, now we have been adding net customer addition at a much slower pace of about 2 to 3,000. Whereas in the past, we have been adding about 5,000-6,000 customers. So as soon as we are able to fix the churn in the silver category, and we are able to get back our paying subscriber addition comfortably above 5,000-6,000, that should bring back the growth in the collection from customers as well.
So that is the next question, Dinesh. When do you expect the subscriber addition to go back to the 4,000 to 5,000 per quarter kind of number? And what are you doing to bring it back? And do you see it happening in the next couple of quarters itself, or do you think it's going to be a slow recovery when it comes to the paid supplier additions?
Given the last 3-4 quarters effort that we have done, it looks like it is a slower recovery. I was expecting this to improve in last 2-3 quarters, but it has not. It has been more stubborn than what we thought. What we are doing, one, we are trying to identify the geographies as well as the categories where IndiaMART is not working out well for that set of customers, and we are trying to move away our cost of customer acquisition efforts from that side. So that will reduce the unnecessary customers that are joining IndiaMART but not able to get enough value. On the other hand, we are also trying to fix what is the buyer and supplier ratio should be. Currently, if you see the number of inquiries being delivered to the unique business inquiries, that number used to be around 6.5 or 6. Now we have brought it down to 4.5. So we believe that now the suppliers are sufficiently enough responsive that 1:4 buyer-seller ratio could be better going forward. But that's an hypothesis. Hopefully that as a product market fit works out better.
Just to kind of specify a bit more, could you give us a timeline when the paid subscriber addition will come back to the run rate of 4,000 to 5,000 per quarter versus the 2,500 that we saw this quarter? Is this Q3, Q4, Q1 of next year?
I'm afraid I'm unable to give any timeline as of now.
And okay, then at least in qualitative way, could you tell us what is the clear plan that the company has to increase customer? Because this lower subscriber addition has been an issue for IndiaMART for a very long time, at least for the last 3 quarters that we have been listening that the customer addition has not been great, and now even the collections have dropped because of the same?
Yeah, it has been the 5 quarters that the problem has been at hand, and we have been, we realized it. Initially, we thought that it's one of the quarter, but then we realized it over the last quarter, and we have tried to correct it over the last 3 quarters. It has not been corrected. I still believe that it will take another 2 quarters to say anything meaningfully there. Because it could be a product market fit issue, it could be, it is definitely not a sales issue. It could be a service issue, or it could be a product market fit issue, which we are trying to fix. I wish I knew a better answer to that.
Absolutely appreciate, Dinesh, the fact that of course you're going back to the customers and trying to understand what isn't working, and it will take 2 more quarters because it's a long-term business, not only a few quarters. But just wanted to get a better sense. Now, given the fact there is this issue at the moment and concern regarding customer addition and subscriber addition, is there a risk to your 10 to 15% growth guidance as well? Next couple of quarters, can the growth be just single digit for the full year then?
No, I don't think that is true. I think we will continue to maintain a double-digit growth. I don't think because our ARPU growth has been upwards of 10% in the past many quarters. So I don't think that is a very near-term possibility. But yes, if we are not able to fix the paid subscriber addition in the longer period of time, there could be issues related to that.
Now moving on to the margin front, if you look at, margins have been better on a sequential basis, at least for IndiaMART. So what led to this, and is this margin level sustainable even going forward, say for the second half and for the next financial year as well?
So as I've been guiding the margins, as against the FY24 margin or Q2 of FY24, I think we were at 28-29%. And I have guided that over the last 2-3 quarters, we have done some sustainable work towards 33% margin. This particular, that 36-37% that you are seeing in the last 2 quarters, it is probably primarily because the revenue from operations is flowing from the deferred revenue, which resulted into the higher collections in the last year or so. And but if you really look at the cash flow from operation to the collection, the margin has not been improving. So we will still be guiding at 33%, 34% margin in the long run.
Okay, so it's just that timing of the deferred revenue coming in a bunched up way, which is leading to a better margin optically, but operationally speaking, it's still 33% thereabouts. The category of the silver one that you talked about and the high churn issues that you're seeing there, is it just limited to that, or other categories are also seeing a bit of a sluggishness? And again, what's the what's the way to solve the problem then?
See, as I've been guiding, about 50% of our customer base is in the silver category, silver monthly and silver annual, and about 50% of our customer base is in the gold and platinum. So gold and platinum, they contribute about 75% of our revenue. Now the reason that despite the fact that the paid subscriber addition has been in the range of about 5% only in the last 5 quarters, we have still been able to grow the collection from operation as well as revenue from operation, because the above the top 75% revenue or top 50% of the customers are neither affected, and in fact their ARPUs are increasing quarter on quarter and year on year. So it is the problem which is limited to the newer customer attraction and retention. While the older customer who know how to operate IndiaMART and how to take value from IndiaMART platform, they continue to spend even higher on the IndiaMART platform and being more sticky than earlier.
It's some of the new clients which have to be told and kind of made aware of the platform a bit better. Thanks so much, Dinesh, for joining us and candidly speaking about your earnings. In the meantime, take a look at Paytm. That one